This is your LMAX exchange technical update for Thursday, February 2nd, 2017. Euro dollar. So the euro continues to trade within this bullish channel out from 14-year lows in early January, and this could very well extend up towards next key resistance in the form of the December peak at 108.75. In fact, this latest break that we saw above 107.75 actually projects a measured move upside extension into the 109.30 area. So expect an overshoot of 108.75 in the sessions ahead, and for the euro to potentially trade up into that 109.30 area and even see a overshoot beyond towards 110 before the market considers the possibility of rolling back over. Sterling dollar. So cable is inching closer to critical resistance in the form of its December peak at 27.75. The market could very well trade up towards that level in the sessions ahead. However, it's going to be very hard, I believe, for that market to establish above this resistance point, which is a major resistance point, and we could soon see a resumption of declines back down towards the recent range lows as this market prefers to consolidate more. If, however, we do see the establishment above 27.75, that could open the door for major upside into the 130s and suggest that a major longer term base is in place off that plus 30-year low that we saw back in October of 2016 at 118.40. Dollar yen. So dollar yen is in the process of consolidating off recent lows that we saw in the 1250 area. We did break down below that 1250 area in Tuesday trade, but the market does now look like it could continue lower following that break and eventually trade into a measured move objective into the 109.50 area. So again, we have been chopping around, hovering above 1250 mostly, but the break that we saw on Tuesday below that 1250 area does set up the possibility for the next major downside extension towards 109.50 before the market then looks potentially for that next higher low and a broader bullish resumption. Euro Swiss has been trading within a downtrend. The market has seen a bit of a bounce in recent trade, but a lower top is now expected, and a retest of that 2016 low, which is within stone's throw at 106.24, should be tested. Again, the pressure does remain on the downside, and it would take a break back above 107.60 to compromise that outlook. Aussie dollar. So Aussie has been trading off recent highs in the 76 area, but the market is showing signs of wanting to stall out. We could see a little bit more upside, but that takes us into some meaningful medium-term resistance in the 77 to 78 area. So if we do see a push higher, don't expect it to last, and eventually look for this market sooner than later to roll back over, potentially back towards medium-term support at 71.45. Dollar CAD. So dollar CAD has been hovering just over 130 since breaking below that psychological barrier on Tuesday, trading down to 29.69. There is risk that we see one more drop down towards and below 130, even below 129.69, that recent low, but ultimately the longer term structure here is still constructive, and so the market is expected to be supported somewhere below 130, ideally in the 128 to 130 area ahead of the next major upside extension. Kiwi dollar. So the New Zealand dollar is stalling out after trading up to as high as 73.50 in recent trade. The market could still chop around and maybe even poke a little bit higher, but it continues to look like this market is putting in a longer term top off that 2016 high, just shy of 75. So expect the market to roll over sooner than later with a potential move all the way back down towards medium term support at 66.76. That's going back to lows that we saw in May of 2016. SPX 500. The S&P 500 has been trading just off recent record highs, but the market could show signs of potentially rolling over. However, we would need to see a break and close below 22.32 to confirm such a potential structural shift, and until then, this is viewed as nothing more than a minor correction in favor of what could be the next major upside extension into the 23.20 to 23.40 area. So again, while we are seeing potential signs of exhaustion, we need to see a break below 22.32, that low that we saw back on the 30th of December, to confirm a potential structural shift. Gold. So gold looks to be putting in a higher low now at 1180 above that critical 1122 base that we saw in 2016. That higher low will be confirmed on a break and push back above 1220, which will then open the next major upside extension towards a measured move in the 1260 area. At this point, only a break back below 1120 would ultimately compromise what is a longer term basing outlook for this market.